Let's go.
Awesome, man. Thank you so much for the
I see you on the
opportunity.
beach, man.
Yeah, well, since they got us locked down, man, I'm like, I'm gonna go to the beach one way or another. So I'm just
Let's
trying to
go.
enjoy some nice weather in the background.
That's right. That's
I'm
right.
waiting on a waiter to bring me my drinks and
You
stuff.
drink. Yo, listen. Let me tell you. Right now, you're on a platform right now that showcase thousands of customers every single day,
Right, right.
and they're saying right now they want to know. They want to know who is this person here? Who is this person? And how can you help me get to the bag? That's all they want to know. Who is this person? How can you help me get to the bag? So Marcus, I want you to tell the people who you are and then show them how they're gonna get to the bag.
Awesome, awesome. Well, I'm Marcus Williams, as you know. Believe it or not, my trade anniversary was May 5th, uh, 2020. That was my second year anniversary. I joined IML at the time 2 years ago. So I've been attached some form of way to IML for 2 years. And I was able to learn a lot from Oran Wright. Oran Wright, #1 educator on this platform, in my personal opinion. And I took a lot of what he was teaching, and I was the type of person that I cannot wait for this head and shoulders pattern. It's taking too long. I don't have the patience to wait for this right shoulder to play out. So I would often tag Oren on Facebook on 5-minute charts, showing him the same kind of trade setups that you're looking for on the 1 hour and the daily. I'm seeing them on the 5-minute and the 15-minute and the 1-minute entry. So basically, my strategy came to a head when I learned all of the support and resistance, supply zone and demand zone, the head and shoulders, trend lines, learned all of that. And then it came together with this thing called quarter points and minor quarter points. Once I added all that I've learned from IML, then I went to this thing called quarter points. I was able to see that the market is doing the same thing over and over in between these quarter points and minor quarter points. And if you give me just a few moments here, I'm going to show you exactly what I mean. I'm known to make Forex easy. Literally, I said once I learned how to trade, what I was going to do is find a way to make Forex easy. And I did that. And we'll go ahead and share my screen here. All right. And just let me know, Oren, you can see my screen, correct? I just want to make sure. Great, 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 great. So we'll go ahead and jump straight in. All of you already know what I'm getting ready to tell you. When the market is going on, there are two teams. There are two teams, period. I don't care if you're looking at GBP USD, like Bale. I'm sorry, I got to back up. Can we first of all just thank Mr. Bale Granville for coming on and sharing us that awesome sauce? I also watched him on the Web Analyzer back in the day as well. Awesome trader. But just like he was showing you on the GBP USD, you see the market going up and going down. But there are only two things that's happening. It's the bulls versus the bears. If you're looking at the AUD USD, it's the bulls versus the bears. If you're looking at the New Zealand versus the USD, it's not the New Zealand versus the USD. It is, but it's not. Only thing you need to be concerned about is the bulls versus the bears. And here's what I found out, guys, that's been so easy for my trading. If any of you all are following me on Facebook, you can see how we're catching a lot of pips. I've been showcasing the skill set of catching pips. My entries are very good. And it's because I found out that the Bulls and the Bears are on a football field. And I'm going to show it to you. They're trying to make a touchdown. Believe it or not, the only thing that they're trying to do is play football. And anybody that knows football, you're going to know exactly what I'm referring to. So if you recognize this, this is a football field. I'm trying to see, it's not going to let me annotate, is it? Okay, so That's a bit of a problem, but we'll just use the mouse. Why won't it let me annotate? Okay. All right, cool. We'll just use the mouse. So the market, when you think of football, guys, you're thinking of 100 yards, right? You're thinking of 100 yards. Well, the market moves up and down the field. That's what I'm sorry. The football players go up and down the field. But the market does the same thing. And when I show you the next few slides, you'll see exactly what I'm talking about. Let's just act like down here we have the Bulls. We have the Bulls. If the Bulls had a football, what they would be trying to do is push the market all the way up the field so they can get a touchdown. And once they complete that 100-yard move, what happens after that typically? It's the other team's turn. The Bears would be on this side. Now the Bears push the market down, or the Bears football team would be pushing the market down, right? And they just go back and forth, back and forth, 100 yards at a time. Now, watch this. What I'm getting ready to show you is about to be mind-blowing. It's actually going to change everything that you learned from Mr. Bale, and everything that you've learned from Oran, and everything that you've learned from whoever your mentor is. This piece right here is going to really glue everything together, because we're used to looking at the football field like this, right? That's what we're used to looking at it like. But let me show you this. We'll go and get out of this presentation mode, and let's go to a chart, all right? So when we go to the charts, just before I go any further, Oran, is there any way for me to be able to annotate on here to draw on the screen? Because I don't see it as an option. Or
no, everything is on your end now.
Yeah, no, it's not giving me the option to do that.
No, if you were on TradingView, yeah. But you're on.
Yeah, I use this thing. I use the actual market, but it's fine. We'll go through it. We'll go and get through it. It's no problem whatsoever. Just make sure I don't see the option as we continue. Nope, that's not it. All right, cool. So we'll just have to use we'll just use it like this, okay? So this is how my screen looks when I'm normally trading, guys. It looks just like this. And what I want you to make note of is these are my support and resistance lines, okay? That's what they are. They're support and resistance. But I didn't draw any of these lines. These are quarter point lines, okay? These are quarter point lines and minor quarter points, okay? Let's just take for an example here. I want you to pay attention to this is GJ. Now, for all new traders, GJ is the dragon of the crew. GJ will either make you money fast or to take your money fast, okay? So you got to make sure you're on the right side of her. But I want you to pay attention to what happened today, okay? Today, this market had really chopped up and went sideways, if you will. Let's see. Okay. All right, so we came down from here, and it kind of dropped in between these lines here, okay? This is what I want you to pay attention to. Pay attention to the fact that this says 137.000. That's a 100 pip line. For the sake of football, we're going to call that a touchdown zone. That's what we're going to call it, okay? A touchdown zone. Now, pay attention to the bottom right of my screen. You'll see it says 136. Okay, 136.000. So in between these lines is a 100 pip move. 100 pip move. Okay. And what I was trying to explain to you is whenever you're looking at a currency pair, you're not looking at GBP versus the JPY. You're not. You're looking at the Bulls versus the Bears. There's always a football game going on, and whoever is the stronger is going to determine who's going to score a touchdown. Look at what happened at 8 o'clock this morning, okay? So right in here where this box is, that's 7 o'clock. Right about 8 o'clock, this market pushes up here. The Bulls push up here, and you get a touchdown at 137, right? So as soon as the 8 o'clock bell opens, the Bulls push the market up, and they stop there. And immediately, watch this, immediately after the touchdown happens, the Bears say, okay, it's our turn. And the Bears drop the market 100 pips. Now, this is a 5-minute chart. Believe it or not, I trade on the 5-minute chart. I trade on the 1-minute chart. Okay. Now, of course, we don't have the time to give you the whole my whole strategy, but just to give you a glimpse into it, I'm able to look at a 30-minute chart, make a decision on who has the overall strength, because unlike Coach O, I'm not looking for head and shoulders on a 1 hour or a 4 hour or daily. I'm looking for a 100 pip move. And what I'm going to do is I'm going to decide, am I going to cheer for the Bulls or I'm going to cheer for the Bears? Okay. So right here, after this touchdown is made, the way I've taught my students, the way I've taught people to learn how to trade is, as soon as a 100 pip move has been completed, automatically assume that the market is going to go the other way. Now, does it happen all the time? Absolutely not. But if you have a preconceived notion that, listen, if a market completes, and what you see here is the market hits this 100 pip line right here, 137, that psychological institutional bank line, 137 has just been hit. Look, a wick hit it. And if you go to the 1-minute chart, it looks even sexier, if I could use that word. Yeah, it always do that. All right, now we fix it. Let's go right here. So when that market pushed up right here, hold on just a minute. You guys, I'm live, so if you need to drop something at the door, you can go ahead and drop it at the door. Hush, Major. Hush. Hey, y'all come to the door right now, okay? I'm sorry about that. So as this market pushed up, when the market pushed up and made a touchdown, what happened was it went and got a touchdown, and immediately after touchdown has happened, you get a touchdown at 137, and the Bears get in the market and they drop it 100 pips. Now, it's noteworthy that they don't just randomly drop it. It doesn't just drop to a random number. No, we're back on the 5-minute chart. Major, hush. Once it drops, once the Bulls get a touchdown, the Bears grab the ball or the price and they drop it down to this 137 level. Okay, this is 137 right here. And after they do that, hey, do me a favor, young man. I need you to get this dog and go tell your friends that I'm busy right now. Okay, get your dog. Okay, get your dog for me. Thank you so much. I appreciate that. All right, put him in the cage. So after the market hits this line, the Bulls immediately get the ball or the price and they take it back to this line. In a short version, wouldn't it be nice to know that if you already know the market is really only trying to move 100 pips at a time, that you're able to be right there when that price move happens? You're able to be right there when that price gets ready to go the other way. Now, does this always happen? No, because if you see the example here, the Bulls push up to this line and then the Bears push down to this line. Now the Bulls get an opportunity to score another touchdown. So here's another example where that price, the Bulls get the ball and they take it to the touchdown line. This time, and this is what I like to say, when that market breaks a 100 pip line, now we've just entered into another arena. Okay, so no longer are we playing 136 to 137. Now we're playing a different team, and the Bulls are trying to push the price from 137 to 138. And so if you pay attention, they failed to do so today. So today, the Bulls broke through 137, and they're headed to 138. Now watch this. That's just one of my strategies. I would not have the time to tell you how we use. There's 4 pieces of my strategy, okay, that you would want to know. We have the 100 pip bounce. We have the 75 pip hesitation zone. What is the 75 pip hesitation zone? Let me show you. It just did it, okay? When that market broke through 137, it went up 25 pips, 50 pips, came back, gave you a double bottom, and it goes to the 75 pip line. This is one of my strategies, that if that market begins to go sideways at a 75 pip line, it's getting ready to go opposite the other way. And that's up or down. Either way, it's going to go up or down. If it drops 75 pips, look for a hesitation. If it goes up 75 pips, look for that hesitation and take the market the other way. And you're talking about no drawdown trade opportunity. So we got the 100 pip bounce, which is your touchdown. We have the 75 pip hesitation. And we also have this thing called the 50 pip pullback. Let me show you what the 50 pip pullback is. Look at how this market broke 137. When it broke 137, I want you to pay attention to the fact that it stops right here at this yellow line. What does this yellow line represent? A 50 pip move, because you got 137.5. So 50 pips in, this market takes a break. Now, of course, we see the wick and GBP, JPY, it moves very strong. But you see the close happens right at the 50. Now, my students know that when the market on any pair, when it moves 50 pips, we expect for some type of a pullback. What if you knew this strategy and you're waiting for this market to see, well, is it going to keep going? Oh, it's slowing down at the 50 pip. And if you go to your 1 minute chart, because I enter in on the 1 minute chart, I'm not scared of the 1 minute chart. I'm actually probably the king of the 1 minute chart. But look at what happens if you're on the 1 minute chart. Now, this is information that you already know. You know that they just broke 137. So now we're in a new arena. They bulls push it up 50 pips, down, set, height. They go 50 pips, and the ball gets intercepted right here, right? The ball gets intercepted right here, and the bulls pull the ball back 25 pips. It actually goes close to 30 pips. Let's see how far. So if you knew this strategy, and of course I use Hakanashi because the Hakanashi candles is an indicator, especially when you're a day trader, an intraday trader, a scalper. The Hakanashi candles are indicators, okay? And I don't have the time to give you the full sauce, okay? But as I would have saw this, now I didn't take this trade, but I'm just showing you an example. The market breaks this 50. You get a reversal candle, you get a bull candle, and an interception happens right here, and that market gets pulled down 38 pips. They call me the anytime ATM strategy guy because I literally can look at any currency pair using my strategy, find out where it is, and kind of predict what it's going to do. So we have the 100 pip bounce, the 75 pip hesitation zone. We got the 50 pip pullback, and we also have the 25 pip U-turn. Let me show you an example of that, and then we'll turn it over to Coach. We'll turn it back over to Coach to go whichever way he wants. So let me see if I see an example of a 25 pip. Oh, let me just show you my 50 pip, because this was my 50 pip pullback going up. Let me show you my 50 pip pullback going down. Here's the 50 pip pullback going down. You see how this market breaks 137? You see that? You see the break. It breaks 137 right here. Marcus, what time frame are you on? I'm on the 5 minute. Can you believe people can successfully trade on the 5 minute chart? Yeah, they can. I do it all the time. This market breaks 137. Look at how many pips it dropped. Let me show you how many pips it drops when it breaks 137. It drops to this 50 pip line. Now, is it right to the 50? Of course not. Forex is not that simple. But it comes down, it drops about 60 pips. But me and my students know we should be looking for this market to pull back. We should be looking for this market to pull back. And what does it do? It pulls back and gives you, if you got in this market down here at the bottom, especially on this retest right here of the 50-yard line or the 50 pip line, easy, 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 easy 35 pips. Marcus, how can you put easy and forex in the same sentence? You have to ask. One of my students literally sat in trainings with me for, 2 weeks. She put $100 in an account, and in one day she took it from 100 to 215 using this strategy. Period. Point blank. Yes, she did. Because it's easy. Now she don't know about trading, and guess what? Let me tell you what, I'm going to show you the 25 pip U-turn. The reason why she was so successful is because the only thing she knew was me. And if the only thing she's been taught is Forex is easy, it's easy for her to just go ahead and do it because she's not clouded with, oh, 95% of traders lose. I didn't tell her none of that. The only thing I told her is you got to watch out for the 100 pip bounce, the 75 pip hesitation zone, the 50 pip pullback, and the 25 pip U-turn. I'm finna go to the 25 pip U-turn, but Coach likes to use this thing called retest all the time. Watch this. You see how this market breaks this one? Watch this. Y'all already saw it. It broke 137 during the London session. You know what else a lot they tell y'all? They tell you don't trade the London session because it's slow. Excuse me, buddy. That's a 50 pip drop. That's a 60 pip drop during the Asian session. Everything that you've been told, they try to make it like it's hard. It's not hard. It's not hard. But this market broke 137, and look what it did this morning at 8 o'clock. It retested 137. This is the same market that broke during the Asian session. Watch this. It broke it during the Asian session and came back during the London session. I'm sorry. Well, this is the London. That's the New York London overlap. Retest to 137. And I know you guys see the head and shoulders pattern. You see that. You see that left. You see that head right there. You see that right shoulder on the 5-minute chart. I know you see it. It's beautiful, ain't it? You didn't know that was 5-minute head and shoulder patterns in it. All right, come on, Marcus, find a 25 pip U-turn. Wow, thank you. Look at this. Here's a 25 pip U-turn, okay? So this happened yesterday on Wednesday. The market broke the 100 pip line, 137. I've taught within my strategy, once the market breaks a zone, if it only goes 25 pips, it's going back the other way. Because this move right here is to entice buyers. And let me tell you why my strategy is so different. Y'all not going to like this. Y'all not going to like this. Y'all not going to like this because this is what they told y'all. I trade against the trend most of the times. Most of the times when I take a trade, I take it the other way. Because let me tell you why 95% of people lose. I'm going to show you. If you would have saw this movement right here during a New York session, this is about 10 o'clock Eastern Standard Time. If you would have saw this, you would have been looking for a buy opportunity. Oh, we get ready to eat, man. Yo, buy GJ. No, not my students. We're looking for that market to start slowing down. We'll enter in right here, 6 to 10 pip stop loss. Did you hear what I just said? You didn't hear what I just said. Yeah, I'll say it again. 6 to 10 pip stop loss. You heard it. And look what happened. If you know my strategy, the market breaks 137. It goes up 25 pips. It goes up a little more. It's a little more, but GJ is a little, she's the dragon. She's a dragon. She's a dragon. Goes up. My students know, enter. There's a reversal candle, a doji, a shooting star, whatever you want to call it. And the bears intercept the ball. And what happened? Y'all already know what happened. That market went back the other way, right? It went back the other way. So that's my strategy. I'll stick to it. 100 pip bounce, the 75 pip hesitation zone, the 50 pip pullback, and the 25 pip U-turn. I just showed you exactly what it is I've been doing to be very successful in trading foreign exchange, and it's plumb easy. Oran used to tell me all the time, man, you got to get off that low time frame. I agree. If you don't know what you're doing, stay away. Especially, don't mess with GJ. GJ will humble you very fast. Okay, but GJ, I know how to tame GJ. I beat GJ up all the time. That's the 100 BBB strategy. I do have another strategy that I built with these lines called the Anytime ATM strategy. It's one of the best strategies I've ever came up with, and I'm currently working on that. But listen, Oran, thank you for the opportunity, man, to share what it is. I know, man, but we'll turn it back over to you, man.
Let's go. I appreciate you, Marcus. Guys, go ahead and drop those fives inside the box. Drop those fives inside the box if you, it's always refreshing to see a different approach. because not everyone trades the same, no one trades alike. But when you can have someone who's like a storyteller, okay, because when you listen to this trading thing, you know, you're gonna have traders that sound like Ben Stein, you know. All right, guys, so the market is gonna do this. The market, the one thing I love about there's many things I love about your trading style, Marcus, but the passion in your voice, the passion in your voice, and I just sent you a few screenshots of the comments everyone was saying. Guys, this is Marcus' first time being on, the Go Live as a live educator, and you guys probably you're thinking to yourself, wow, he's like a natural. He's like a natural right now, because when you're passionate about something, it flows natural. Okay, you can tell when someone is not passionate, and the one thing I love about um, the football strategy. You're absolutely right, Marcus. You're trading the Bulls and the Bears. It's a game. It's a fight. Who's stronger, the Bulls or the Bears? And looking at the comments right now, the live, they're excited about it. So, guys, if you'd like to see Marcus come back, on the session, and we're putting something together. Seeing if we can get this. Now, Marcus, you trade New York session, right?
Yeah, man, I tried that London session, but born and raised in Atlanta, and I like to sleep, man. I love to
Okay.
sleep.
All right, no worries, no worries. So we're gonna see if we can get a schedule popping for everyone that's on levels, and we're gonna work on some things, and we go from there. But brother, I definitely appreciate you for jumping in on this call today, sharing your value, sharing your knowledge. Also, everyone, give it up for both of our guests that we had on the call. Somebody said, "Give him the ball, coach." I'm giving him the ball. I'm waiting for him to get wide open and run down the field so he can catch the ball, get off the bench.
uh,
So yeah, I appreciate you for jumping on this call. Let me see, we got about 15 more minutes. Marcus, stay tuned, stay on the call. We want to go over this homework real quick, because I always like to give the students homework. All right, perfect. Stay tuned. All right. So, guys, we're back on the homework screen. Back on the homework screen. If you can help me, Marcus, go over this homework. And just looking at this, Wendy, you got an A+ on this one. That was a good homework that you had. All right, Patira, we looked at yours. Okay, great, nice, good homework. Okay, let's see. Let's see what we got here. All right, so just to show you, Marcus, real quick, what the homework entails, what they're supposed to be looking for. All right, you see my whiteboard, right, Marcus?
yes, sir.
All right, so their homework, they have to identify the consolidation, and the consolidation comes right after a long move. All right, long, strong move. Boom. So now we're going to have the consolidation. Once that market makes a strong move up, it'll drop down one, and then it pulls back. This is two. You're usually going to see a triangle, okay? And it'll stay in this range. So this is going to be your consolidation. So number one, they have to find the consolidation. We're going to put the letter C. And then after the consolidation, we want to see if we're going to get a fake out, but we don't know it's a fake out yet. All right, we don't know it's a fake out yet, which is also the head, until the market does this. Until the market comes all the way back up, breaking above, giving me my retest, and they saw a lot of this on your chart. So the whole time, even though you were on a 5-minute chart, they saw this on your chart and they were calling it out. So now this is what we're looking for. Once that market comes back in, we take the real move. Consolidation, F is for fake out, and the T is for the real trend. So you have the CFT. All right, the CFT. This is what we're looking for, and we want to see who got the homework right. So it doesn't matter if it's in sell or buy. All right. So let's go back over to the Right Way Academy. Now, looking at this homework here, after the strong move, you see that trend right there, Marcus?
Yes, sir.
They have the consolidation. What pair is this? This is CHFJPY, consolidation. All right. They already see that we have a fake out here. Cool. Fake out. The market comes back up. Now, this trader is saying they're going to buy right here. They're going to buy right around that zone. So what we want to do is, let's see if this trader was right. Let's go over the levels. And this is CHFJPY. Somebody said, that's my homework. Let's see if you got it right. CHFJPY and woo. Marcus, what you think, man?
Yes, sir.
Look at this. Here's their consolidation right here.
Yes,
wow.
sir.
Wow. Okay. Okay. I'm impressed now. Consolidation. False move. Shift back up to the high. Catch the trend. Shift the market up. Whose homework is this? Let me see. All right. Tabug said, that's my homework. Let me see, Tabug. I don't believe you. Let's go back over. Country Gold. Is that you, Tabug? Are you Country Gold? Nah, I don't think that's you. Yo, Marcus, look at this, the entry. 113, 148. 113, 148 right here. That's a wick entry.
Yep.
100 pips. Great work, Tabug. Country Gold. Wow. Now, I got a question for you. How many pips did you take? This is a beautiful setup. Did you take the whole 100 pips or you stopped at 30? What do you think, Mark? You think they took the 30 or they went for the 100?
They took that 20 to 30, man.
They took that 20 to
ain't
30?
ain't nobody holding for one. I don't even hold it for 100 pips, and I know it's gonna go 100 pips.
But look at the rules. Once the market give you that fake out, you take this.
Beautiful.
Woo!
Woo.
Beautiful trade.
Yeah.
And he said he took the trade, so now we got to give him a grade. Grade A. Yeah, that's an A plus, man.
Yes.
A plus. That's beautiful.
Amazing.
Oh, he only took 40 pips.
Yeah. That sounds
And
about
that's
right.
still good, man. All right, let's see what Chris got going on. 3 downward trend triangles. Let's see what you got here, Chris. Okay. Chris, talk to me. All I see is fake out, fake out, fake out. This is going to be a consolidation? The triangle? Okay. Consolidation. Fake out. Where's your retest? Maybe your consolidation line was a little off, Chris. I know you were going for here. Your consolidation line was probably off because if this is your consolidation and this is your fake out to the top, your retest would have got you in that trade. Okay. I think you shorten yourself on the consolidation phase. All right. So all of this from here, drop, boom. This is a consolidation. Once you identify a support, resistance, support, 2 points right there. That's your consolidation. This is just a continuation. All right, that's a continuation. All right, so your grade is pending. Grade pending. Yes, Jason, waiting for another markup. All right, I want to see another markup. Grade is pending. So Marcus, what do you think? You think the students are learning?
Man, I love the way you're making them put together their own homework And that's what it takes in order to be successful. You got to go do what you learned in class at home on the charts by yourself. I'm loving this.
Look at Delano Edwards. Delano's saying we got a small consolidation area. I don't like it. I would have used this area as consolidation. Market goes up, drops, goes back up. It fails to break the high. This would have been my consolidation. We still got the fake out. And then as the market shift up, okay, you still got the entry. So Delano, you have to work on your consolidation areas, okay? Work on identifying the consolidation area. All right. Your zones are too small. Okay. So everyone understanding this? The zones are too small. This is not a consolidation. The market drops right here, pulls back, and then continue. I need to see that market trapped. Need to see the market trapped in the area. All right. So I'm not going to go over all of the homework right now. Oh, I see this name all the time. Rambo. Diane Rambo, is this you? Let's see. Okay, Diane. Euro CHF. Consolidation. Consolidation area. Breakout. Good markup. Good markup. Euro CHF. Now, if the market doesn't come down and break this zone, and this is why I like this even better, because levels give you your left shoulder. So if the market breaks below this area, now you're breaking out of structure. And the moment you break out of structure, now you're looking to trade in the opposite direction, and you can hold these trades a lot longer. Okay, good job. All right, good job. Give you a grade on this one. But guys, we're going to come back at 9 p.m. tonight, and we're going to finish looking at the homework. Okay, finish looking at the homework. But once again, I want to thank my guests for jumping on. Mr. Marcus playing for the Atlanta Falcons. That's his favorite football team.
That's right. Absolutely, man. Come on. I ain't know that. Listen. I'm born and raised in Atlanta. You hear what I'm saying?
Okay. So, yeah, I don't even know how to talk to him anymore because he likes the Falcons. I'm a Patriot. You know, I'm a Patriot. But thank you all for tuning in. Please, coach, grade mine, God's Power Mark. I already graded your homework. And I gave you a shout out on Facebook and IG. Mark? All right, that's me. Cool. Thank you. Not a pair trade. All right, let's go. All right, Marcus, thank you. Appreciate you, brother. And I will see you on the next one.
Yes, sir.